You ever wake up in a cold sweat in the middle of the night and just ask yourself, oh my God, what have I done?
Sometimes it's a hot sweat, but no.
It's a hot sweat. All right, TMI.
Listen, Bitcoin was an 80 vol asset and we're seeing the downside of it. We got to keep it in context. I mean, the S&P is down 10% since Thursday at 2:00. I had hoped this year was 30,000 low in Bitcoin, a 30,000, 50,000 range was my hope. Inflation's been a little more stubborn. The Fed's going to have to be more hawkish.
Cryptocurrencies are swimming in a sea of red as the market downturn continues. For the first time since January 2021, the global cryptocurrency market cap fell below $1 trillion on Monday morning, according to CoinMarketCap. The overall cryptocurrency market is down about 13% in 24 hours amid the carnage following Friday's release of yet more red-hot inflation data. The crypto investor is drawing parallels between crypto and long-term capital management, a highly leveraged hedge fund that blew up in the late 1990s. We are going through what feels to me a little bit like a long-term capital management moment in crypto, Novogratz said on CNBC's Squawk Box. It was the big hedge fund with all the leverage, and when it started unwinding, there were repercussions everywhere. We are seeing that in the crypto space right now. Long-term capital management was a hedge fund that rapidly collapsed in the late 1990s, rippling through the financial system because of Wall Street investment banks' exposure to the fund. It was bailed out by the Federal Reserve. Last week, Galaxy Digital CEO Michael Novogratz said he sees a bumpy road ahead for equity and crypto investors, although he's still optimistic there will be an expansion of crypto adoption and its application in the real world. Novogratz, whose firm provides financial services and investment management in digital assets, referred to Bitcoin as a store of value that will remain a real macro asset. He spoke at the Piper Sandler Global Exchange and Brokerage Conference on Wednesday. For crypto and equity markets, Novogratz isn't banking on a V-shaped recovery. Instead, he predicts a combination of market bottoms, ups and downs, and sideways movement until a new narrative emerges on the macroeconomic environment and interest rates. The U.S. Federal Reserve increasing interest rates to lower inflation is causing hiccups and unpredictability in economic models, he said, adding that he's preparing for kind of a longer battle.
We're going through what feels to be a little bit like a long-term capital management moment in crypto. A lot of people are too young to remember that, but it was the big hedge fund that had all the leverage, and when it started unwinding, there was repercussions everywhere. And we're seeing that in the crypto space right now with both Celsius. We had it first with the Terra Luna ecosystem imploding, and that's causing a lot of damage around the system. It's causing a deleveraging that's accelerated. We've gotten to levels that I think should be close to the bottom, 20,000 Bitcoin, 1,000 Ethereum. There's been a tremendous amount of capitulation and fear. And so usually not a good area to sell. Doesn't mean we can't go lower. I think the macro environment's still pretty challenging out here. But there's been a lot of damage done.
I mean, we've had you on for a long time, and really not that long, but I can remember Bitcoin got back to 10 or 11,000 and ran up to 14,000, and you admitted that you actually lightened up a little at 14,000, then it went back down. And so we've been talking about this at levels that, 10,000, 65,000. It's pretty staggering, what we've seen. At this point, Mike, it's dropped from peak to where it is now. It's the fourth largest percentage drop. So it's dropped a lot more than that previously and still was able to get all the way back to new highs. You think we're seeing the same thing here? But
well, listen,
then again, you said you thought 40 might be a low, you thought 30 might be a low. Yep. Now you're saying you think 20 might be a low. I mean,
This is certainly more painful because the numbers were bigger, right? More money lost, more infrastructure in place. And so, it's a big industry all of a sudden. I think we'll see job cuts. I think the industry will resize itself quickly. But listen, Bitcoin will lead the markets back out of this Fed tightening. The moment the Fed flinches, the moment, Powell pauses because the economy is really starting to roll over, you're going to see Bitcoin explode north. It was interesting. I watched the interview with Stan Druckenmiller who talked about Bitcoin potentially being one of his assets. Lots of guys I talk to are seeing, the next time they're going to get engaged is, when they start sensing Fed's going to pause. Equities often go down further. Right? If you look at 1970s, gold led the market back, not stocks. And so I think we've established Bitcoin as a macro asset. It was supposed to sell off this year, given that it went up because the Fed was full of easy money, and Powell decided he was going to look more like Volcker this year. And as long as the Fed is hawkish, it's hard for any risk asset to do really well.
Binance on Monday halted withdrawals of Bitcoin for several hours after crypto lender Celsius also blocked customers from pulling funds from its platform, citing extreme market conditions, while digital assets slumped in price. Bitcoin, Ether, and other major tokens have wobbled in recent weeks while inflation has surged and big central banks have signaled they will cut back dramatically on stimulus.
Today's episode is sponsored by iTrust Capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right. iTrust Capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust Capital. Click the link in the description to open a free account now.
The price of Bitcoin fell as much as 10.3% on Tuesday to an 18-month low of $20,823.56 according to Bloomberg data. The drop followed a sharp decline the previous day on signs of strain in the infrastructure underpinning the digital asset market. Binance blamed a stuck transaction for its suspension. Celsius is one of the biggest players in the market for digital yield products, providing users with the ability to lend out their tokens as collateral for other crypto projects. In return for lending their tokens, traders were able to earn annual yields of as much as 17%. The Celsius move triggered a slide across cryptocurrencies, with their value dropping below $1 trillion on Monday for the first time since January 2021, sparking worries the rout might spill over into other assets or hit other companies. Companies exposed to cryptocurrencies have previously warned that declines in token prices could have ripple effects, including by triggering margin calls. Let's hope that Bitcoin, which moves the direction of the market, is able to withstand further downtrend, which may make things much worse than it already is. Here at Savvy Finance, we have not sold anything and don't intend to. We will keep hodling until Bitcoin gets to $1 million a coin. We know we will be hodling for many years to achieve that, but we are ready to do just that. Thanks for watching and keep hodling.